So I'm sure people are wondering why I included economics in a course about venture capital. There are two reasons. Number one, I love economics, but number two, because I also think that it gives us a big picture of why we do what we do and why we work in this wonderful sector that we do. I started off in healthcare, and now I work in the intersection of finance and economics. And I really think that understanding the impact or the potential impact that venture capital could have on our economy, particularly Nigeria, is really important. So in terms of an overview, I'll be talking about how venture capital interacts with the overall economy and particularly what excites me about what it could do in the economy in Nigeria. So this is the World Economic Pyramid. And as you can see, most people in the world, no matter what social media tells you, and no matter how many cars you see on Instagram, most people right now in the world live on less than $3,000 a year. $3,000 a year in Naira is about, so that's about 150,000 Naira per year, per month, sorry. So most people in the world, no matter what they tell you on Instagram, most people in the entire world live on less than 150K a month. And that's what we call the survival market. A lot of people in Nigeria live on less than 30K per month. So in terms of, I guess, lifting people out of poverty and giving people better lives, we need to think about the sectors that really can make an exponential impact in terms of GDP, in terms of the amount of money that a country makes. And that comes through innovation. And to have innovation, we need to be able to fund innovation. And that's why venture capital is so important. So this study was done by a Deutsche Bank in Frankfurt. And it was on the economics of venture capital, basically. And I'll read directly from the slide because I think that these insights are so important. They say the econometric results confirm our assumption that VC, venture capital, contributes to economic growth through two main channels. The first channel is through the introduction of new products and new processes onto the market. And the second one is the development of an improved absorptive capacity of the knowledge generated in private and public research institutions. So what venture capital really does is, number one, of course, you understand what it does. It brings products and processes onto the market, and that's really common. And people understand that first channel. But that second channel is not talked about more often, but I think more important. There are loads of universities in Nigeria, loads of these research institutions doing all kinds of things. But what kind of talent are they able to attract? They're full of civil servants right now whose research is underfunded, or people that work for government and are paid by government, whose research is underfunded. They themselves are underpaid. The places are literally forgotten about, and government does not have budget to give them. But what venture capital does, and what this study is trying to say, is the fact that these products or these pieces of research have a chance now, because of venture capital and because of this risk capital that can go into these pieces of research, actually have more of a chance of becoming multi-million-dollar, multi-billion-dollar products. Venture capital actually not only just introduces those products and processes onto the market and thereby raises GDP, but actually venture capital acts much further on in the pipeline, or earlier on in the pipeline, by even affecting the way that these public and private research institutions function. Once there's a view to money in these institutions, then the research generated and the absorptive capacity of those institutions changes. And this is one of the things that definitely excites me about the effects that venture capital could potentially have in countries like Nigeria. Don't forget, Nigeria is overwhelmingly the poorest country in the world in terms of the number of people living in poverty. The population of Nigeria is only 200 million. 90 million people live in poverty. There is absolutely no country in the world with that many people living in poverty. India has a population of over 1 billion. Only 70% of those people live in extreme poverty compared to 90 million in Nigeria. So we have a problem. And I think that part of the solution to the problem is what we're talking about today. It's about these angel communities, and it's about venture capital, and it's about growing that industry in a way that can grow our economy. The second study that I'm going to, and these are all studies that, you can see the references on the slides. So these are, I'm just taking the main quotes out of these studies, but they are super interesting reads if you read them from end to end. So if you do have access to PubMed or JSTOR or any of the journal articles, or I think you can actually buy the articles directly off the internet, then I'd advise you to do so if you're interested in doing some further reading, because these are really good reads. And the second one, I think, is from Poland. Sorry, I can't pronounce any of the names of the writers except Jeremy Greenwood, and it's from 2019. And what they say is that, they're writing on the impact of venture firms on the aggregate economy. And what they say is something we already know, at least the first line we already know in Nigeria. Most firms, most companies, most organizations are born small, they stay small, and they innovate little. And if you want any proof of that, then just stop the video and go and look outside your window and tell me about the businesses that you see. The hawker selling pepper, the malam selling milk, the, the market women selling tomato, the mom and pop shops. Most businesses or firms are born small, they stay small, and they innovate little. Only very few firms achieve high growth and engage in innovation on the way to becoming large, successful businesses that contribute significantly to productivity and growth. And what are the two things Nigeria needs? What are the two things that Uganda needs? What are the two things that Ghana, Zambia needs? What are the two things that Rwanda needs? We need productivity and growth. Even South Africa, that is what we like to call the Europe of Africa, you people still need productivity and growth. We all do. And only very few firms achieve that. Anywhere in the world, very few firms achieve that high growth that enables them to engage in innovation on the way to becoming large, successful companies. So while both financiers, both banks and venture capital firms provide funding and expertise to startups, what they have found is obvious again, right? Venture capitalists offer a higher level of expertise to startups than banks, because venture capitalists disproportionately target the most promising young startups and play a critical role in turning these startups into engines of economic growth. So even though venture capital firms don't seem to attract as much attention from the government as banks, it seems like venture capital firms, when it comes to innovation, when it comes to turning small companies into large companies, do a lot better than banks. And obviously this study was actually talking about European banks. If you talk about African banks are not really in the business of turning small businesses into large businesses, if we're being perfectly honest. That's not their business. Their business is taking deposits and using those deposits to buy treasury bills. That's their number one business. And their number two business, maybe Dangote, the mega corps, the big companies, giving them money. But they're not really in the business of helping small companies become large. And that's not really their business at all. So that means that venture capital, because of the cost of capital constraints on our banks here, it becomes even more important for us to grow this sector in Africa and definitely in Nigeria. And this study is actually from Singapore, in the Singapore Economic Review. Again, another good read. And it says it's useful to bear in mind that while the US government had initially implemented policies that helped create the ecosystem for entrepreneurship and venture capital to thrive, the eventual success of Silicon Valley was largely endogenously driven. And what that tells me is that, yes, the government does have to provide an enabling environment, and we can speak to our governments about that. But at the end of the day, we have to drive it. And one of the last points I'm going to make is about bank-centered versus stock market-centered economies. And I know that we've danced around it. This is a really interesting point. And I think it's important to bring everything that we've said together on the economy. And for the first time in this course, I've used myself as a reference. So if you want to learn, I'll take a deeper dive into the differences between bank-centered versus stock market-centered economies. Then please read my book, Banking, Finance and Economics in Emerging Markets. I have a lot to say about this, but I'm just going to talk about it briefly on this slide. And when we study markets that have very large banks, and the banks are more important than the stock market, and people are more used to putting money in their banks as opposed to their stock markets, as opposed to equity, then generally speaking, it affects the level of innovation in those countries. Now, on a balance, I would say that banks, compared to the stock market, have an outsized influence on the Nigerian economy. And I love banks. In fact, that's another one of my obsessions. When I was doing my master's, I got a distinction in banking. So I love banking, and I'm obsessed with banks. But I also know, and the banks in Nigeria have done incredibly well. So I have to give all these disclaimers, at generating returns for their shareholders and really doing what banks should do. But banks are a problem if they have an outsized role in your economy, because banks do not fund innovation. The stock market funds innovation. Households are far more likely to put money into innovative products and innovative ideas than a bank would. And because of that, you find out countries like America, which have extremely active stock markets. In fact, I think that it has the highest number of people, or one of the highest number of households invested in the stock market of any country, is also the most innovative. But banks wouldn't have funded all of those companies. So if you want to improve your level of innovation, and in Africa we have to improve our level of innovation, then we must concentrate on the equity-driven asset classes. We must concentrate on what venture capital does, which is funding innovation. And there's very, very good evidence. I go through it from multiple journals, academic journals in my book, that equity-focused economies, stock market-focused economies, do far better than the bank-centered ones. And I think that this is the most important slide of all, actually, which is how VC-backed companies drive economic growth. And in recent decades, venture capital has generated more employment and more economic growth and employment growth in the US than any other investment sector. I'll repeat that again because I think it's super important. In the recent decades, venture capital has generated more employment and more economic growth than any other investment sector. In a lot of African countries, we've had extremely sluggish economic growth and extremely high unemployment. And it's not just the unemployment that's a problem. The unemployment then dovetails into a much bigger problem of insecurity, because people are not doing anything and they think it's better to go into banditry or kidnapping. They're not doing anything at all. So this asset class has the potential to help our economy grow faster. It has the ability to create employment. And as a result of that economic growth and employment, has the potential to solve some of our security problems as well. So this is a massive policy opportunity. Annually, venture capital investment in America only makes up 0.2% of GDP, but delivers an astonishing 21% of US GDP in the form of VC-backed business revenues. And this is from the Brookings Institute, the Metropolitan Policy Program. So it's absolutely fascinating that 0.2% of GDP in terms of investments makes up 21% of US GDP in forms of VC-backed business revenues. And if that isn't a fantastic ROI, I don't know what is. Thank you very much.